Hi, and welcome to today's edition of Market Analysis. I'm Giovanni Benacour, operator and educator with Vantage Markets. Today is Wednesday, September 14th. Well, let's begin with our short conversation about the markets. The Federal Reserve was slow to act when inflation reared its head and markets were too fast to think that policymakers had done enough to contain it. After the latest readout, which shows inflation remains strong across the board, it is clear the Fed must up its game and investors should curb their optimism. So, great are concerns about entrenched inflation that the chances of a 100 basis points rise from the Fed next week leap from negligible to 40%. That move will be the first of its magnitude in more than 40 years, when the Fed chairman Paul Volcker engineered two massive but brief recessions to tame inflation, and the prime lending rate exceeded 21%. A more aggressive path is needed to dislodge persistent price pressures across food, rent, and cars. So a 100 basis point hike is not crazy. Learning lessons from the 1970s when monetary policy was eased too soon, today's Fed Jerome Powell will likely keep the pressure on until inflation has been stamped out in all categories. That view sent two-year Treasury yields to their highest level in almost 15 years, and yesterday sparked the biggest equity sell-off since June 2020, with the S&P 500 crashing 4.3% and the Nasdaq slumping a 5.2%. Futures in both stabilized overnight, and in terms of the federal funds rate, markets now expect a 4 to 4.25 range by the end of the year, from 2.25 to 2.5% currently. So rising as high as 4.5 by March, I think we could probably even see higher than that around the 525, 550 era. But even with the hot jobs market, life is tough for consumers who have experienced two consecutive years of flat or declining household income in real terms. Now, inflation does not always follow a linear path, and in the UK, it eased slightly in August to 9.9% from 10.1% bucking forecasts. But the Bank of England thinks it has much higher to go. So let's take that into consideration, and let's see what could we contemplate for today before the market opens. Well, we're looking at the daily chart here. I have my support level at 11,800. Let's change this to 30 minutes, and you can see that the market is really quiet right now, waiting for the U.S. to open. Should the consensus or the tendency is for the markets to continue with its decline. How much further can it go? Well, we can revisit that June 16th low, but for now, we need to obviously come in and take out that 11,800 psychological level. That 11,000, around that 11,000 June 16th low is also on the table, but perhaps not today. Will we see that at the end of the week? Most likely, I don't know. Let's take a look at the S&P 500. Let's go back down to 30 minutes. There's a bit more fluctuation in the S&P 500. Crude oil. Let's take a look at 30 minutes. It's really ranging. It's really looking for traction, staying above that $86 mark. Should the market come and give the U.S. that $80 barrel that they came out saying that they will look to buy when the market comes down to that $80 barrel, and obviously replenish those inventories that have been taken out of their special petroleum reserve, SPR. So that they need to obviously replace that inventory, and they said that they'll replace that inventory when the market hits $80 or lower. So contemplate, some sort of a pullback towards that $80 mark. That could be also seen. Nat Gas is right now is breaking out of this ranging consolidation stage. We've seen a breakout right now. A 0.75 is my initial resistance. Once we break that, $9 will be the psychological resistance level. Then we have here gold, and gold is really just really fluctuating right below my pivot point of 1,706. Uh, you know, we could probably see a nice pop to the upside if the dollar index retraces, but the dollar being so strong, we could probably see that 1700 is the psychological support level right now for gold. So we need to obviously find some traction and see if gold would decide to make an attempt at the 1720 or 1715. Then we have silver. Silver is the one that at least it has held its footing above $19. It's looking right now to start a nice move to the upside. From this movement to the upside, I'm contemplating 19,700 initially, 19,800, but $20 is my resistance on silver. Then we have copper. Let's take a look at copper in 30 minutes. All right, so copper is the same thing. It's been quiet when the market opens. I let's see. I anticipate that market will most likely take another attempt at the up. Like make a take out the pivot point, go up to the 3.76, 3.80 mark. Then we have here Bitcoin. As long as the Nasdaq continues to get plumber, we'll probably see the same movement on the Bitcoin. 20,000 right now is the support level for Bitcoin. Breaking that level, we have the pivot point below that, and then our resistance at 18,500. Then we have the euro. Euro is really looking to hold, its footing above, right around the parity. That would depend a whole lot from the dollar index. And the dollar index at this moment is retracing. 109 will be that support that we could probably find those buyers and hold the value of the dollar index around that level. If not, then obviously the 108 mark is the psychological support level. We could probably come down to it. It'll help, obviously, silver, crude oil, and especially gold. All right, guys, that's it for today. For now, have a great day. See you again.